All right. All right, let's do this. Okay. So today we shall be looking at today's day 4, and we have 3 days of holiday. So I mean, it's 2 days for me, 3 days for y'all. So where is this? Ah, yeah. Okay. All right. Okay. So uh day 4. So today we are pretty much going to cover these topics. Uh Trading view split screen, that's something I missed out. And then Bharat had told me about this yesterday. So we'll just look at that. Understanding calculations, risk. Okay,
I
we'll
was
look at.
about to remind you about this, the
Yeah,
split
see, I
screen.
remembered Laku. I wrote it down in my brains. Yeah, so
Is it the
then
split? Is it the split screen or it's like four screens, four charts we can see at
we
one?
look at that because everybody's subscriptions are different.
Okay, okay,
Okay.
perfect.
So I'll show you what I have in accordance to my subscription. And then I want Hendrix to see because he's got the unpaid version. So his might be different. Okay,
Okay.
so we'll look at that. Then we'll talk about spreads, we'll talk about charting, we'll talk about terminologies because a lot of you guys would be, you know, getting to know stuff like I mean tickers and all you all know, but cash in, cash out when you all see in the reports, what is cash in, what is cash out, what are partials, take profit you might be knowing by now, SL you all know obviously, stuff like this, right? So we'll talk about a little bit of that. We'll talk about volume, okay, how to gauge volume. I don't really use volume, but I think it's something that you all should know. So we'll talk about volume, and then we'll have a nice little back testing, live sampling of some tickers historically, the way they performed in the past, right? So we'll go through all these things, right? So we'll cover up trading view first, since we're at it. Okay. So now when you all have your trading view screens open,
Yeah.
okay. So if you go to trading view, you see this icon over here. You can see my cursor or
Yes.
no, or no. You can see?
Yes.
Okay. What is it? What is this? Okay, it's not here. It is on the layout. You see this box?
Mm-hmm.
And this box, if you click on this box, now I have a subscription that I pay for, but I want everybody to click on this and see what they get, right? So I have clicked on this and I get a whole set of options, 1 to
Yeah.
16. You all should
Yeah.
get 1 to 16. I don't know if you all have access. You all should have, but
I have
Yes.
one
uh,
to 16.
okay.
Yeah,
So if we
it
click on
shows.
option 2, it's a split screen.
But then I don't have that. If I
Ah,
go to,
it's yeah, it says that I have to subscribe, yeah.
Okay, so
yeah,
then you have to subscribe. Yeah. So
yeah,
uh that's fine. You don't need two screens. Man. Okay, so what we'll do is so basically once you subscribe, you can have access to all these screens like this and all that, right?
Yeah.
There's
yeah,
no need. This was just of Bharat's understanding because he had the question. You don't need to do this. You can open two trading view options, but again, since I'm subscribed, I can open another user. Like for example, I can go to trading view again, you know, and I can get this box over here and close this box here and I can split the screen. There is some option in your PC as well, right? For example,
yeah, yeah,
there's an option in your PC. For example,
yeah,
my screen will have an option. I don't know what it is now, but I'll have to
yeah.
click on
I
these
do have
buttons
that.
down. Yeah. So you can do it
Yeah,
anyway. You can do this manually. You
yeah,
can do whatever. You don't have to pay money and
yeah.
subscribe as of
Okay.
now, right? But
Can
only
open
if you
two windows.
yeah, only if you subscribe, you'll have the functionality to log in. Or another better option is, for example, if anybody has a C Trader account, okay, if anybody has and we'll try to work around this later on, but you all will have to open an account with a demo account just so that you have CTrader access, right? If you open a CTrader account, you will have multiple access screens. Let me open the CTrader account. Okay. Okay, so this is CTrader. Okay. Okay. It is somewhere here. I forgot. I haven't opened this in a long time, but you have the option. It's somewhere there. Yeah, I think. Yeah, so basically, if I go to, you see this?
Yeah.
Okay. And then I can click on something else also. See that, Laku?
Yeah.
So if you subscribe for TradingView, you have these options. Otherwise, you don't have the options. You can get a demo account with one of the brokers like Dominion Markets. So it's free. And you can get all three screens in CTrader. Or your broker
CTrader is a broker or it's a
platform. It's a
It's
software,
a
platform
platform.
software.
Okay.
Okay. So we can work on that later. And even if you have MetaTrader 5, I think you should have it. But I use it from TradingView. But CTrader will definitely give you the options to add as many charts as you want.
But for this, we need a bigger screen to see.
Yeah, obviously, that's the first thing. You buy big screens. So with the small screen, I would recommend not to do all this because then you'll get confused. You're going to see like, teeny mini ants on your screen.
Yeah.
So if you have big screens only, it's applicable. But if you have one small screen, I mean, you need to focus on that ticker, right? So then it becomes a bit challenging to navigate through two different screens. So which is why I stressed upon the desktop in day two. It's important you build up your terminal because it comes into handy. Like towards the end, you all will be looking at stuff. You all will be having TradingView. You will be having the market atlas. You will be having your terminal with the broker where you're booking the trades. You might be having Discord open. You would be in a Zoom call, and probably you would be looking at a section which has news. So you need screens for these, right? And you don't have to go for big gizmos. Like probably even if it's a tab where you have something running, you can have one screen. And if you have a laptop, one screen, a laptop, and a tab. So that would suffice, right? But you definitely need to, especially when it comes to a lot of tickers. Like for example, when I'm scrolling, I have these set and I keep on moving, right? So I keep on moving very quickly. And it's about whether you prefer moving on from ticker to ticker or having a full view where you can gauge which stock is actually moving quickly, which has volatility, which is a good stock to look at, then maximize the screen, look at that stock and take a trade.
Okay.
So it gives you that option and it benefits you instead of, going from 1, 2, 3, 4, 5. You have everything in front of you. And then you see, okay, I see potential in this stock. I just maximize the screen and then you hit it on. All right. Okay. We will move on, push on to this again. Okay. So this is what we're going to talk about. Volume, and then we'll do some back testing, right? So let's dive into it. Okay. So essentially the three most important components that we require prior to taking a trade or to assessing pre-market conditions or to understand, okay, like whenever I said that, okay, I'm looking at, 1, 2, 3, 4, 5 stocks. And then you would be wondering, how is he looking at 1, 2, 3, 4, 5 stocks? Okay. So I have a full-fledged thought process for doing that. Okay. And it's based on three things, which is liquidity, volatility, and volume. right? And this is applicable for pre-market, post-market, when NYSE opens, in your strategy for everything, basically. So liquidity is nothing but, and again, liquidity is applicable to everything, to various asset classes, and again, when we talk about terminologies, we'll detail out what these terminologies are. So when it talks about, for example, I'm trading gold, okay, it's easy to comprehend that gold is highly volatile, okay, because it comes with a lot of liquidity. That's a lot of market participants, okay, retail, on the retail space and on institutional level, who are invested in gold, right? Hence, more participants, okay, showcases more liquid volume, which is in that asset class or gold or whatever. So let's move away from gold and move into the equity space, the stocks space. And if you see, I might have more volume in Tesla, okay, because Tesla is a well-renowned stock where a lot of people are invested in and have a lot of interest. So if I were to choose between Tesla and say, I don't know, ACDC stock, which is, a low float ticker, which is not having much of volume, which is not having much of interest. It moves rarely. Oh, where's the liquidity? Where's the money in? Where is the participants in? Right? The participation is more and the interest is much more on a Tesla stock. Okay. And that gives you the odds to, place your trades, because a lot of people are actually buying and selling that particular stock as opposed to the other stock, right? Which is not very favorable. So that is liquidity. Okay. So the advantages are obviously there. Okay. You can trade in large quantities because again, more participants means that there is more volume which is there, which means you can take larger contracts, right? So in the other stock, if there's less volume, okay, less amount of buyers and sellers, it's obvious that uh, you might not get the actual intended share that you want to go into, right? So if I want to take 5 contracts, or sorry, if I want to take 50 contracts, I might not be able to take it because you might not have that amount of buyers and sellers invested into that stock, right? So that's all about liquidity. Okay, so when people talk about, in the Discord also, you might be talking about liquidity, liquidity is taken, liquidity is there. We feel liquidity is over there. Okay, the liquidity that you have to focus on when it comes to stocks, because Diaz trades in gold, so he talks about liquidity in the Discord and any charts, and I speak about liquidity because I've done a lot of sort of work on liquidity and I take liquidity setups as well. That is different from the liquidity I'm talking about here, right? So when I talk about liquidity in the stock space, I'm talking about understanding, okay, I've got a stock. How many people do I know I can physically see are invested in this stock? Yeah, what are the numbers? A lot of people in. It's like saying that, okay, fine. I want to buy a particular product. I go to some grocery which is down that I mean, one of those 24/7 or not 24/7, one of these small time groceries, and I want to buy a particular product. Do I go to a grocery or do I go to a bigger store, which is a hypermarket or Carrefour or Lulu, where, I can actually use my money to cash in to buy that particular product because there are more goods out there. It's as simple as that, right? So the larger the the investors or the buyers and sellers in that particular stock, the more opportunity it presents to you, right? And the more volume you're going to get, which you're going to talk about, right? And again, the larger the liquidity, because when you have around, 50 million, 75 million people coming in, buying and selling stocks at whatever prices that is there on offer, you have so much more potential because the moves are going to be there because buying, selling, buying, selling, buying, selling, buying, selling all the way into the session. Okay. So you can get in the market at any point of time, get out of the market at any point of time. You have more space to make your transactions and to place your trades. It's as simple as that. Is that Are we clear with that concept?
Yes.
Yeah, I have one question.
Yes, Shilpa.
Yeah, I've come across this word liquidity sweep.
Hmm. Oh yeah, yeah.
I
That is
don't, I
what you.
mean, I
Yeah,
always come
that is
across
what.
this. I just wanted, and I
Yeah,
don't
because
know.
I use it myself. I use it
I mean, I
myself.
don't know the meaning. I just come, I just,
Yeah, you should not
yeah,
know this meaning as well because that's a very, very vast field that I've
okay,
covered. Maybe in the future you'll get the opportunity to learn that from me. Maybe, I don't know, but it's a very complex subject
okay,
and it's not required, right?
okay.
Liquidity sweep is something that you would have heard about in the stock space as well. We don't
Yeah.
need that, and I'll tell you why we don't need that, right? I'll show you that right now. For example, we are going to look at gold just for 5 seconds, right? Not, I mean,
Okay.
literally, when I say 5 seconds, just for a small amount of time. We're just going to look at gold. Okay. Now, you remember the trade which I posted in the morning? Shweta would be tracking gold. Shweta, you observed the trade I posted in the morning?
I did not check today.
Okay. So I took a gold trade in the morning, again
Okay.
with my funded.
Mm-hmm.
So this is a liquidity sweep.
Okay.
Okay. So now what happened was the price came down. So this was at 4169, 4170. Okay. The price came and this is my target. My target was over here at 4201. Okay. So the price swept down and exactly precisely hit that target.
Yeah. Okay.
Okay. So that was around 200 pips. Now, so this was my trade posted here and that is the live chart. So that is liquidity. Yeah. I got out of the position because I was not comfortable with the stop loss. It was 100 pips. So I was not comfortable with that. Right? Was I right in my judgment? Absolutely. Right? But it's the fact that there's so much of volatility and volume into gold that it came down and I was not willing to risk more than 50 pips. I cut my position and then it went exactly to my targets.
Mm.
Yeah.
Right? So my trade was perfect. The setup was brilliant. Right? But in the end, I mean, what? I had to cut it off. I cut it off. It's fine. Right? So liquidity sweeps and this sweep and that sweep. And then how do you actually define liquidity? Right? Now, where is liquidity? Can someone tell me where is liquidity over here? Where is liquidity? So someone will say liquidity is here. I'll say, no, man, it's over here. And someone else will say, oh, it's over here. I'll say, no, it doesn't make sense. This is here. Then you'll say, this is here. This is here. So liquidity is nothing, but again, we are moving off context here. But liquidity is nothing, but it's a space where there are buy orders or there are buyers holding positions with sell stops. That's what liquidity is, right? So for example, you're getting into a long position and this is a level, okay? A lot of buyers have their stops over here,
Yeah.
okay? So that means there are buy orders coming into the market, okay? So, you know, there are orders over here and then price goes up and then this is a liquidity sweep, as in all of them have been stopped out. But it's something we don't use in the equity space. I know about it, okay? But it's a very complex sort of space to get into right now, right? And it's not really required to achieve our end goal, which is to make money. So that is, so if you hear liquidity sweep, because you'll hear about it because I play it and Zia plays it to a certain extent, you just need to ignore it. Ignore the noise, right? Anything that doesn't make sense, and it's not common sense, you should ignore. Okay, so that's liquidity sweep. All clear?
Yeah.
Okay. So then volatility again goes hand in hand with liquidity because you need fluctuation, right? You need movement of price. You need the candles to move. You need a stock that moves. Otherwise, what's the point? If something is not moving, if something is stationary, you're not going to be making money. If something goes up, you make money. Or if it goes down, you make money. If it's sideways, you're not going to be making money in stocks,
Yes. Yeah.
right? Because you have spreads and blah, blah. So we need volatility.
Mm.
Volatility is kind of ascertained only when you have more participants in the stock, more people buying, selling. That's when it moves, right? Henrik, do you want to watch a dull game where the ball is
Huh?
moving from court to court, from goalpost to goalpost, or do you want to watch a very exciting game, the Argentinian final with France? That's what we want to see, right,
Yeah.
Henrik? When you
Yes,
go to a
yes.
pub where you pay that money, we want to see games like that. We don't want to see boring games, right?
Exactly.
So where does your interest lie? Your interest lies in the volatility which is actually going on a football pitch. Ball from this goalpost to the other goalpost. That's the excitement, right? But when you have a boring game, you're not going to have excitement. There's no interest in that game. You agree,
Yeah.
Carlton? Carlton is gone, I think. Okay. All right.
Yes,
Okay.
yes, I do. I do.
Yes. Okay. So that's what volatility is about. You'll have movement in price. So whenever I say on the Discord, there's no volatility. If you look at the chart and if you say, you know what, 1 candle, 2 candle, 3 candle, and we'll explain that later while looking at the charts. But nothing is moving. There's a very slim chance for you to actually cash in and make money because there's nothing technically moving in the markets, right? So yesterday was one of those days. Yeah, but fortunately I wasn't trading, so it was good for me. So that's volatility, and then you have volume, which is pretty much the same, that you have volume as in more participants putting in their money, getting buy orders in, getting sell orders in, market executions, buying the stock, selling the stock. That is volume. So these three things are the core elements that should enable us in decision making, okay, and everything else, right? When it comes to cutting losses, booking trades, using risk, your risk appetite, holding positions, increasing your targets, everything. These three core elements come into practice, right? So all good so far?
Yes.
Yes, yes.
Yeah.
All right. Now we are going to be looking at terminologies, okay? Because I know sometimes we use a lot of terminologies that may or may not make sense, okay? And sometimes there'll be short forms and all that. So we'll try to simplify things, right? So in case I've missed anything out, or in case you see something which is alien to you in the Discord, just pin that out to me. So then I'll clarify it, right? So SL, you'll all know what SL is. Who doesn't know what SL is? No one. Perfect. TP, you all know what TP is, right?
Yeah.
PNL, you all know what PNL is.
Yes.
Net PNL,
Hmm.
correct? Everybody knows what net PNL is in context of a trade or number
No,
of trades.
no, can you just say what is net PNL?
Perfect. Okay. So now net PNL, Hendrix, is nothing but in the Discord towards the end of the day or on the weekly reports of ours, you see this.
Yeah.
So my trade summary was as such: break even, 148 points, $6.2 on AMD, TP hit, take profit hit. Okay. Trade closed $1.5, SL hit, stop loss hit, 80 cents. Okay. Net profit is the sum of everything. Simple.
Okay.
Okay. So if you take this 0, 0, B is break even, means it's 0, no profit, no loss.
Okay.
Okay. If it's a tick, that means it's it's not a losing trade. So anything
Yeah.
green, we love green over here. Green is our favorite color. No one wants
Yeah.
to see red. We only look at red for Christmas, but we don't want to see red on this floor. Okay, but then sometimes we are compelled to see it, right? But green is good, right? So that's why you'll see me saying green day, greens. Okay, so that would mean that okay, fine. There's no loss on the trade. Okay, so it would be a tick green sign. So trade closed, tick means 148 points of profits. Okay, so you calculate this 0, 0. Okay, and I'll distinguish this there. 0, 0, 6.2 minus 1.5 minus 0.8 will give you this.
Okay.
So it's the sum of all the stocks. Very simple. So if you look at the performance dashboard, you'll find total PNL and you'll find net PNL. So net PNL is nothing but the total of the winning trades and the losing trades. Clear?
Yeah.
Okay, very simple. Okay. Cash in. What is cash in?
Taking the profit.
Yeah, cash in is when I anticipate that I am expecting the price of X stock to go up by $2. Okay, because of again things like volatility, volume, and all that. I'm not sure about the stock. I cash in, as in I close my positions in full at $1 or 1.5
Okay.
because I'm not sure the price will reach take profit. Okay, so I have no ego when it comes to
Can
the
you repeat
market.
that, Savio, please?
Yeah.
Can you
So
repeat that?
Carlton, for example, okay, I am expecting to have a target for a particular stock for $2. Okay, means I want to, I'm buying the stock and I'm saying this stock is going to move by $2. Okay, it moves to $1, it moves to 1.5 and then it comes down a little bit at 1.2. Okay, you're feeling me, Carlton.
Yes, yes, yes.
Okay, so we are at 1.2. I'm anticipating the stock to hit $2 because that's my take profit. Okay, at that point of time, I'll make an informed decision looking at again elements like volatility, price action, and volume. I'm going to cut this trade off as profit as 1.2. So that's my cash in. It's not hit my take profit, my target. Okay, but I've cashed in at $1.2
So,
because of
is
the
this
trade.
that I asked you before until it executes? Can we move position? So by this one, when I say okay, currently you're saying you wanted to make $2, but you see a small dip and you wanted to quickly make a quick change and settle for less. So you can change that PNL, lower it down.
Yeah, yeah.
Instead of
So
two to one.
once we have executed a trade, okay, we can change the parameters of the stop loss and the take
Parameters.
profit.
Okay.
Okay.
So in this way, you've lowered your parameter. Instead of 2, you made it 1.
Yes, I've lowered it. I've settled for cashing in and closing the trade because then I feel that, and that's what happens with the real markets. When you
Okay.
see a shift, okay, when you see a shift between investors, that's what they do, right? They put their money into one stock, and if they feel that okay, fine, there's no potential for the stock to move further, they will pull their money out and put it into another stock.
Right. Okay.
That's exactly what I do. I'm not stubborn. I don't have an ego when it comes to the markets. I just use my common sense. So if I'm aiming for $3 and if I'm risking $1 on $3, I don't want to wait for the price to go for till 2.5, okay, and come down all the way and take my loss. You understood?
$1. Yeah. Yeah.
So
Yeah. I get it. Yeah.
that doesn't make sense. That's being penny wise, pound foolish, right? So
Hmm.
if we potentially see that a stock has started well, we've made money, there's so much of opportunity to make money on other stocks, I will cash in and we will cash in as well. It's an informed decision that we have to make,
Okay.
right? There's
Okay.
no ego that you have to put in that says if I start with my PNL of $2. I have to wait for the stock to hit $2 because you're never sure about that. So as long as there's volatility, as long as there are other factors that come into play and the market is actually trending, is doing well, it's fine. If we see at any point of time that the market is struggling, that particular stock is really struggling, we will gulp our ego. We shouldn't be having any ego whatsoever anyways, but we'll just cut the trade short, we'll take it on the profits and we'll move on. So that's cashing in.
Got you.
Okay. Everybody clear on that?
Yeah.
Yes.
Okay. Very simple. What are partials? Anybody know what partials are?
Maybe it's keeping the, I mean, taking a little bit of the amount
Yes,
of like.
perfect. Perfect. Okay. Now, in a case and scenario where, sorry, Shweta?
No, nothing. Sorry.
Okay. So in a case and scenario that you're having 1,000 contracts, okay, means big size orders, big order. Okay, you're taking big orders. You're taking a big order into a stock. The price moves up, say by $2 or $3. Okay, your main job as a trader is to, and we'll talk about this more in details on the 20th, right? But this is more being familiar with stuff, which is why I'm not touching upon this topic, but this is the most important topic that we need to do, which will commence on the 20th, right? But just to take a bit out of that notebook, is that our main job and our main focus, our primary focus and the end focus and the end game is always on risk management, right? So when you're putting a large order into a particular stock, your first priority should be always given to the three elements: price action, I mean volatility, volume, and the other thing that we spoke about, right?
Liquidity.
Liquidity. Yeah. So at any point of time, if you feel that there's no potential for the stock to move, I take partials. So I will take off 80%. So if my order size is 1,000, okay, Carlton, how much do I have on the table left?
200.
Perfect. Simple as that. I take out 800, I take profit out of 800, okay, and I leave 200 to run. So I'm potentially risk-free.
So this is the quantity that you're taking. When we say taking
Quantity.
partials means you're the
Quantity.
stuff. Okay.
Quantity. Yeah. So if and this is applicable for guys who use big orders. Mostly. Right? Because if you go one contract, technically, what are you going to do? One order. If you're taking one order, there's nothing much that you can do. Yeah, I think most of the brokers give you the option to go 0.5. I've never used 0.5, but say maybe there is Lakko. I don't know if there is. Okay. So say there is, for argument's sake, okay, 0.5. So if one order is big for you, then 0.5 would be your thresholds in between. Yeah, so your tranches would be that. Okay, but generally the minimum is 1. If you're taking 100 and that's a big order for you, you taking out 80 is partialing. 80 orders profit based on what you have, and you have left 20 on the table to run. Everybody clear on this?
Yeah.
Okay.
Yes.
Cash out is simplistically, I have a stop loss of $5. I see price going down, okay, to $2. I don't see potential on the trade. I see the price falling on me. It's like a falling knife right out there. It's falling on me. So what do you do when you have a falling knife on top of your head?
You move.
You
move.
save yourself,
You
basically.
save yourself.
Stop.
Get the hell out, right? Because we don't want to be in the trade. We want to use that money. We want to use that potential save of $3 and put it in another stock and make money and recover our losses. Correct? We don't
Yes.
want to wait for the price to go slightly above into profit, come all the way and take all our money out. That's ridiculous. That's not risk management, right? And that's not trade management as well, which we will further deep dive into on the 20th. Right? but this is just terminology. I do this a lot, which is why you'll find a lot of my P&Ls having cash in, cash out, cash in, cash out. That's what I do. So I excel in scalping at a very high degree, right? And you're going to witness all of that. So that's cash out, because you need to be using your common sense again. If something is going against you, you don't fight it, you just get out, get into another stock, right? So that's cash out. Pullback retracement is something we'll learn over time, but when just in case we are saying it and we're talking about it in the Discord or in any of our conversations, Shweta is drawing a line. What is that?
Yeah. I don't know. This thing has come up.
Okay.
It's not going.
Okay. Now, if you want to draw, then feel free. No problem, Shweta. Okay. Yes. So
I'm just
basically,
struggling.
so yeah, pullback and retracement, and also stuff like falling, dumping, zooming is some of the words that are used in the Discord and in our conversations. Now, some of these words have a lot of impact on our decision making as a community, right? Because if someone tells me I'm looking at a particular stock, and if Bharat tells me, "Oh, Savio, man, this is falling," what's going to be your thought process? If you're in a trade and you're in $2 profit, if Bharat tells you, or behind a call and Bharat says, guys, this is crashing and this is falling, this is dropping," what is going to be your thought process, Carlton?
To quickly, what is that?
Manage your
To
trade,
quickly
right?
cash in. Yeah, manage my
Yeah.
trade. Yes.
Or to
Yeah.
look at your trade.
Before
Yeah,
full off.
exactly.
Yeah.
So that's an alarming sort of a thing for you, right? If I tell you, hold on, Carlton, there's a reversal, aren't you going to be more calm about it?
Yes.
Yeah, because the reversal is just a red candle over green candle. So we can wait. There's not a massive drop in the price. It's a retracement that is just getting through. It just kind of, there's a terminology which we'll not get into, but it's again exercising the norms of a particular ticker, which is once you have an expansion of the price, as in the price goes off or rallies, from what we've learned, you have a bit of a retracement. It comes down a little bit to settle down, right? And then after it settles down, it further rallies. So that's the way the market moves. Okay. So this is all part of the DNA of the markets. Once you have a move, yes, Carlton.
No, please go ahead. Once you have the move.
Once you have a move, you will see a bit of a retracement. After a gush and flurry of green candles, you'll see red candles coming through.
So in this scenario where you told Bharat said that there's going to be a crash and you said just hold up, there might be a retracement. You are basing this off only through observing the candles or any other factors?
No, that's it. For example, now if you look at the charts, okay, if you look at the charts now, okay, you can be like, this price has moved up, right? You see
Yes.
this price has moved from here to there. Now,
Yeah.
when this happens, you see this,
Yeah.
and if you bought, just imagine, I'll remove all these things. Just imagine this is your PNL you have bought from here. Okay. Okay. You have bought from here and you're
Yeah.
targeting this
Okay.
for argument's sake. Now
Okay.
you're in the money because you're making money, right? You're in the greens.
Yes. Yes.
Now you see this, and and Bharat or someone sees this and says the market is crashing.
Right.
Correct?
Right.
You're going to do one of two things. One is you're going to take a lot of partials and leave the trade risk-free. Means
Right.
90-95%. Two, you're going to say, forget it, man. Bharat told me it's crashing, so now price will come like this, right? But if I tell you that, listen, guys, it's just a retracement, you'll be like, wait, hold on. Okay, let me take 50% or 60%, keep more on the table, and then you can cash in much more.
Okay.
You get what I'm trying to say? So the impact on the words is a lot when it comes to the trading flow. Hence, when you go to the trading flow, No one's allowed to have any mobiles in for obvious reasons. Okay. You can't have, when it comes to terminologies, they're very precise on their language because it signifies a lot. So when someone tells me there's a crash happening, for me in my head, the markets are slumping and I have to look at my positions. What is going on? If someone tells me, because you will have these instances in this Discord in our conversations in the future. So I'm giving you a head start right now because we've been having these conversations in the future. So what has happened is we've been in trades and someone has said that, oh, everything is falling down and is zooming and this and down. Okay, then boom, we've closed positions and all of a sudden we know that the trade is rallied up another $5, $6. Because that's opportunity cost, right? So as and when you go in the program, I will help you identify what is, by looking at the charts, what's a retracement, what is a switch in market sentiments, what is a change in structure, all that you will learn over time. Right? Hence, when Shilpa now put that across, Shilpana, that's what I was trying to get out of you. When you say over here,
Yeah.
okay,
Yeah.
that was what I was trying to get out of you. So if you're in this buy trade, or if you're here or
Yeah.
here or here, what
Yeah.
makes you switch your bias to being like, okay, fine, the market was bullish, now it's bearish? Which point?
Maybe on when I get a red. First of all, when I get when I see the red candle,
Hmm.
but here again, I will see. No, because this has gone parallel.
Yeah,
I will
this has
hold
gone
on.
parallel. So for
Yeah, and
example, if
then
if you if you were in the trade from here,
yeah,
okay, and the trade is
and then here
coming
also
here,
it's parallel. There's a dip,
and the
but
trade
if
is,
it hits if it hits my stop loss, then obviously I'll be out.
yeah, but the stop
Okay.
loss is way down, no? So the price is here. So
Yeah,
stop
so I
loss
will
is there.
hold on. I'll hold on, no,
Yeah,
because
exactly. So you holding off when you see this
the,
price drop is different from someone perceiving this. So for
yeah,
someone else, they might be in a trade from here and they might say it's a crash. But you might be in a trade from here and you might say it's a retracement.
yeah, because I'll have my profits already.
Yeah, it's a different thought process.
Yeah, and
Yeah,
here
so
there's a small retracement only,
yeah,
and
precisely.
only
But someone
candles.
else might perceive it as a change in market sentiments, or the change, it's going from bullish to bearish.
Yeah,
Because they might be entering a trade which is slightly above your price, right?
yeah.
So
So it
everybody is
depends where they
responsible.
enter.
Yeah, it'll be kind of it's not going to make sense. Everybody's going to have different opinions and their trades might be different.
Right.
Right? So when we speak about stuff like the markets are crashing and this trade is not going according to the setup, or when you say that, oh, things are falling, it's dumping, this creates a lot of impact on the trading flow, right? So whenever we talk about reversal, pullback, retracement, it's a healthy reversal, okay, or it's a healthy pullback and retracement rather. Yeah, reversal would again signify that it's moving the other way, okay. And then when you talk about things about, the market is switched from bearish to bullish, you all know what that is. It was like we've been discussing, it was going down, it was having a sell-off, and then it rallies, right? So
Yeah.
whenever we are talking about it, whenever we are writing any of our analysis or thesis, or we are trying to explain about the charts, if a price moves up, if it's come down a little bit, okay, you can make your own judgment for now till we get into the 20th. Okay, and you can say, I feel this is a retracement. I feel this is a shift in the sentiments where the buyers were in charge. Now the market is selling off. So when you say the market is selling off, that means you should not be entering a buy position because the market is what?
It's in the
Selling off, right?
selling off. Yeah.
But when I say that there's a retracement, I
Downside.
have to put more because it's a retracement. I buy from the dips, right, Laku?
Yes.
Exactly.
Yes.
So
But
that
that
will
we need to
change.
understand the chart.
Yeah, that we'll get into now because you all need to know the terminology before we look into that.
Mhm.
Correct. So if I don't
Yeah.
tell you all the terminologies, if I explain it on the chart, you will not know. So when this language is a very important thing that we talk about in markets because it changes your perspective totally in terms of the tickers, right? So pullback retracement is very important. Okay. Market shift.
I have a question here.
Yes, Shilpa.
Yeah, sometimes you get this news also. Right now, there's so much of commotion
Mm.
happening, and then there's a news, and then you're trading in that.
Mm.
I mean, you're trading.
Yeah.
So what do you do at that point?
You shut the news down.
Okay.
So it's the same thing. Okay.
Yeah.
You know what's transpired in UAE in the past 3 months, right?
Right.
Correct. Now imagine you're in the middle of India and the UAE. You're in Sri
Yeah.
Lanka. Okay. So according to you, you're watching the news channels which is populating the news from India. So what is going to be your thought process about the UAE? Burj
Obviously.
Khalifa
Yeah.
is burning every day, right?
Yeah.
Yeah, but we are not seeing it burn, right? Are you seeing
Right.
Burj Khalifa burn?
No.
You're not. So that's news. That's their job to populate information. It's their job to give you their kind of their thesis and their some methodologies of what they see is happening in the markets. It's their job to tell you that, oh, you know what? We think that you should buy from here. We think you should sell from here. But is that something you should really take into your thought process? No, you shouldn't, right? Because there's no right and wrong to news. You might have, and what you'll notice is if you take 5, 6 different news platforms, or you're looking at Bloomberg or look at whatever, it'll be a change in the understanding. It'll be a change in terms of the forecast. It will not be in sync. There will be some guys saying that, you know what, we think it's a buy. There'll be some guys saying that, you know what, we're not sure, let's just wait. There'll be some guys that are going to be saying there's an AI bubble. There'll be some guys who are going to be saying, you know, AI is going to rally. So who are you going to listen to? So if you
It's
say,
basically it's a fog.
yeah, it's a fog. So if you say, Lakku, there's a bubble burst happening today. And then Lakku said, no, I don't think so. My news channel is saying, yeah, it's going to go up. And then, you know, Henrik will say that, oh, no, this guy is telling me, don't put your money, man. Let's just sit all and just relax and talk. Right? And Carlton comes and say, oh, you know what? Remove all your money. This Bloomberg is telling me there's good opportunities in that stock. Let's remove all our money here and put it in that stock. So what happens?
Yes.
Yeah.
Right?
It's a chaos. Yeah.
It's chaos. So you just trade what you see.
Right.
As simple as that. You keep your head clear over all the news, all the matter, all the sort of analysis that these investors and you have these, I don't know what they're called, these, you have the channels where they are predicting prices, future prices, and weekly
Pundits.
prices, movements, pundit. You clear all that out of the way. You don't need that, right? Because common sense, again, the element of common sense. If it was so easy to look at news and anticipate the markets, it was very simple. You just have a plug into Bloomberg. If Bloomberg says buy, you have a bot buying. As simple as that,
But
right?
Savio,
Yeah,
here I want to ask you one question
yeah.
regarding the news.
Mm,
What Shilpana was asking was
mm,
subject to the normal market news. But
yeah.
if you are trading, for example, in a particular stock,
Mm,
AMD or Tesla,
mm,
and if we are keen to know the news about that particular company itself, then we
yeah.
can use that as an advantage of our trading, right?
Yes, you can use it as an advantage, but I've never used any news for any advantage, and I've never got any advantage out of it.
So I'm basically asking about the corporate news which comes from directly from Tesla or
Yeah,
directly from the company
but
which we are trading in that
precisely.
stock.
So what we do is like we have Investor Pro that we look at. You know, when we look at everything, all the details and data and the news,
Mm.
forecasts, projections, everything we look at, right? It doesn't
Right.
matter. Nothing matters. That piece of paper which is publishing that doesn't matter at all. So what's it's self-contradictory, what I'm trying to say in short. If you read the news and if you have a bias created, that is going to be problematic in your trading, in your day trading. You're a day trader, you're a scalper. You're not holding on to a position, anticipating it will move on for 3, 4 days. You're looking at certain variables, you're looking at the order flow, you're seeing what is the appetite in that minute.
Okay.
So any platform is not going to give you the appetite of a minute. It's going to give you a long projection. The news
Right.
is not there to give support to the scalpers and the day traders. It's there for the investors. That's
Mhm.
why they've been paid. The investors are the ones paying them, not the scalpers.
Okay.
So they are there to accommodate the views of the guys who are investing and holding long term because they need that piece of information, which is absolutely correct, which is fine. So we
Mm.
take a little bit saying that, okay, we feel that this is what's going to happen. There was one time I remember last year, Sushma, someone said we were in a Tesla long, I think. Okay. And then she said, oh, you know what? There's a news come up right now that there was some issue with the Tesla door handle or something, if you guys remember, this year around. Some issue with the door. And then she like, see, there's a news happening right now. There's a handle issue with Tesla. I'm not sure. So I think the stock is going to fall. Okay. So everybody who was in it, they closed their positions or they downsized and all that. And then even I moved my stops and all that. It retraced a little bit and then it went up to $5. So so what's the point of that news element? Zero. It's of zero value because your concentration is on the ticker and on the order flow, which you will learn as and when we progress. That's it. You don't need anything else. So you do your pre-market prep and you look at the news and be like, okay, fine, we'll publish it saying that this is what is happening, that is what is happening, that's of significance. It's moved by 15%, 13%. We look at it, we read, and then we put it aside. Once the bell rings, we are only focused on our trading, on our scalping. We make our money and we get out. Simple as that.
Perfect.
No complications, because you can't actually rely on news and you cannot even communicate news across to a group of people because they'll take it in different ways, right? Everybody is going to have a different view in terms of the stock. That is a guarantee. Everybody will look at a stock and have a different viewpoint about it. So again, who are you going to listen to? Right? So news, you look at news, you read news, that's fine, but you stick in accordance to the strategy and the things we look at, and I think you guys are going to be good, right? So market shift, bullish to bearish, that is what when you talk about it in the Discord, that would mean that if it's bullish, it's now turned bearish and vice versa. Simple as that. Okay. OF is order flow. Does anybody have yeah, I think last time I asked you all, right? I think Shilpana knows a bit about it. Laku knows about it.
Yeah, I
Bit
have a
about it.
question,
Yes,
if
Carlton.
you don't mind.
Yeah,
So,
sure, go shoot.
So okay, news, I get it. Don't have to listen to.
Hmm.
But what you also mentioned with the previous scenario where Bharat is telling something and then you are telling something. Do traders actually get on a call while trading?
No.
With okay. This is okay. That was just an example. Then you were saying.
No, I'm saying, for example, if we are in a live Zoom session,
Okay. That way. Okay,
you
that
got
way.
it. So we are in a
Yeah.
live Zoom session, and like that's what we're gonna do, right? In the future, all of y'all are gonna be with me in a live trading session,
Right.
right? So at that point
Right.
of time, what's gonna happen is we say for all of us in one trade, and
Right.
you are bound to see this happen. I'm telling you right now, right?
Okay.
You're gonna be a scenario. You're gonna be seeing a scenario where someone will say, "Oh, you know what? There's some news come up about this stock, and it's gonna dump." And someone will say, "No. You know what? I have not seen this news at all. It's not there. Maybe it's the wrong information." And somebody else will
Hmm.
say, "Oh, no. Yeah, I can see it somewhere hidden over there." And all this commotion is gonna happen. You're just gonna cut the trade short, and all everybody is gonna be proved wrong.
Right.
Right? So the only way we can progress if we synchronize,
Okay.
right? We follow ABC, right? And yeah, everybody's thought process on putting the stop loss and the take profit might be different, but that's fine. But in terms of understanding how to play the trades, we all should be aligned in accordance to the program, right? Because that's what we're here to do, right? So news is very subjective. So we keep that out of the way. We look at it obviously pre-market. That's where I post a lot of pre-market news, which I feel is really relevant. I post it. And at most times it's against that news update which is there. Right. So I just post it so that people can have a flavor. Okay, this is what you can anticipate. Okay. but the moment the bell rings, I'm not even thinking about that, right? So order flow is something we'll learn and look at in the future. Ticker is stock, obviously. You all know that by now. Asset class is nothing but types of products, as simple as that. Commodities, equities, stocks, indices like the Nasdaq, okay, or the FTSE, or you've got the Russell. So these are indices. It's like a bucket of stocks that are comprised, and then you have a ticker which is comprising of those bucket of stocks. Yeah. And then Forex is Forex. Everybody knows what Forex is, right?
Yeah.
Foreign exchange.
Right? Foreign exchange is foreign exchange. Okay. So when I say asset class, that's what it means. As simple as that. ATR is average true range. We don't even we don't look at average true range, but just in our discussions, it's as simple as saying that you know what average true range is the potential average of movement that the stock has over periods. So it could be day, it could be weeks. You can have a different sort of a calculation on the month. So for example, if one stock moves from 0 to 5 today, 0 to 6 tomorrow, 0 to 7 day after tomorrow, 0 to 5 the next day, 0 to 6, the ATR is what?
The average of that movement over those days.
Yeah, which is 5 or 6, right?
Yeah, 6.
Because every day is moving 5, 6, 7, 5, 6, 7. That's the average. From 5, 6, 7 next week, it comes to 7 to 5, 5 to 7, 7 to 5, 5 to 8, 8 to 2. What's the ATR?
Around 6 or 7.
No. See, from 0 to 7 is 7, right? So in the other days, it's moving 0 to 7, okay, and it's within that threshold 0 to 7, 0 to 8, 0 to 6 is 0 to 7. On the next week, from 7, it's moving to 9, okay, 9 to 7 or 9 to 5. Your average range, if you plot it as per week, is 2
I have
because
a
it's moving
question.
2. Yeah.
Does ATR and SL have any, I mean,
No.
doesn't,
This is just information purposes because you all might hear about it and then you'll ask.
no,
This
but
is
when you
just,
have when you have a SL set for a stock,
it
and
doesn't
when
matter.
it doesn't matter.
It
The
doesn't
ATR is
matter.
high as okay.
No, it doesn't matter, right? So basically, you can refine ATR on different methods. So if I want to say, basically, Hendrik,
Yeah.
what's your ATR this week on the treadmill which you're running? How many kilometers?
Yeah. 6,
Last week it was how much?
5.
Same ATR,
Yeah.
same. What's your monthly ATR?
100.
So
Yeah.
every month, approximately you're clocking 100 kilometers treadmill, right?
Yeah.
Same on the stock. So if I'm a gym instructor, okay, or if I'm one of those coaches that want to choose someone who can really make it on a professional field, I'll choose you, right? I will not choose Savio Menezes, I'll choose Hendrik, right?
Yeah.
Because you're clocking more kilometers in the same way, which is why a lot of people like stocks with higher ATR because the movement is more. You understand? Again,
Yeah.
getting back to what I said,
Yeah.
which is looking at stuff like liquidity, volatility, and volume. The more of these elements you have, the better opportunities. Are we all clear on that?
Savio,
Yes.
I
How are
do
you?
not. Can we give it as an example for a stock which is valued at 10 right now, at 10 dirhams?
Mm.
And what is ATR for like this week? So what would ATR for a stock that is
Now,
valued at 10 today be
now
like?
if a stock is the opening price has been 1, 2, 3, 4, and right now it's 10. Okay, for example.
Okay.
Okay. Right now, say the start of this month, it is started with 10, start of the month.
Okay.
And now we are
Okay.
on the 12th of June.
Right.
Correct? Now, simplistically, if I ask you, Carlton, what is the weekly ATR of the stock? First week of June. Okay. You will look at the ticker. You will say, Arey, it started from, what did you say?
10.
10, right?
10,
Okay.
yeah.
It started from 10. From 10, it's going to 12 only, and it's there only full week. From
Okay.
10, it goes to 12 and coming down to 11. And then what is it? Okay. So when you take the average movements on a weekly basis, that constitutes to a number. Okay.
Okay. So
If
the
you say
average
monthly,
move,
if you say,
moved 1 or 2.
yeah, exactly. It's not. So would I be bothered about that stock
No,
if it's
because
moved
the movement
$2?
is too
No.
small.
Two.
Because
Now,
my
if you
money will be
say,
stuck for such a long time.
exactly, yeah. Now, if you say, okay, fine, I'm looking at something else which is starting with 50
Okay.
and 50 has moved. And last week, what's the ATR 50? Okay, let me look at the chart. It started with 50. Arey, fantastic, man, 75. Between the rates 50 to 75. Okay, it's coming down, up, down within that variable of 25. Okay, then
So the
I say, okay, what's
movement,
the ATR is 25? Do I have opportunity of making more money in a range of
of
25 as
course.
opposed to 2?
Yes.
Exactly. So that's a good area. Now you can change the calculations based on the parameters and say, I want daily ATR. You just change that. Instead of looking at it on a weekly scale, you look at it on a daily scale. And then you pick up. We don't look at ATR. It is just information purposes. Because someone might ask about it or talk about it.
Okay, so we are not going to look. This is just the terminology you're explaining.
Terminologies, which is why I mentioned terminologies.
Okay.
So
Okay.
that you're aware about it. Yes, Laku.
I was about to ask you regarding that volatility you mentioned right in the beginning. How do you find the stocks with high volatility? Like, say, for example,
I will show you, no?
okay, you will show.
Okay. Yeah, it's in the next slide.
Okay.
So basically,
Last time I was
yes,
saying Netflix was very sluggish.
yeah,
So
that's
is
what I
it?
mean. So when I say sluggish, that means there's no movement. So the ADR is very low. So hence I'll use this sluggish and slow and crap and all these sort of words, right? So there might be someone who might say ATR, and then you all might get confused. Okay, so just to avoid that confusion, I'm clarifying what ATR is. It's the same thing. You're right, Shilpana. Right? So volatility. Yeah, exactly. Okay. So and again, Lakud, there's no specific definition to volatility. We look at a figure which is derived from trading terminal, okay, and we gauge the volatility. It's never 100% that based on what trading terminal provides, okay, is the output you're going to get of the stock at market open. So it's one of the things we consider. We don't use it as gospel. We use it to select a basket of stocks only.
Okay.
So it's like going to Lulu, it's like going to KM Trading and your wife says, Bharat, get vegetables. Now you think that I should get carrots and cauliflower and what are the other vegetables? And brinjal and lady fingers. Okay. And you'll say, these are vegetables. And then your wife will say, I want to make something pertaining to cauliflower. You take that in. Simple as that. Nothing which I mention in theory impacts what we do on the trading flow. Because that process will be starting on the 20th. This is just context. Right? So when I speak about the 20th, you all are able to understand, okay, this is what it is. That is what it is. Otherwise, it'll go all over your heads because you will not be well versed with all these terminologies and these concepts. Right? So CFDs is what we do. So generally people say, if someone asks you, what do you trade in? And then you will be like, I trade in stocks. And then to the other person, they would be like, okay, so you're buying stocks, you're buying shares and you're keeping it. And then you will be, no, I'm just buying and selling. Then they will be like, okay, do you hold the stocks? Do you want dividends? And then you'll be confused. So to leave all the confusion out, what we are actually doing is trading in CFDs, which is contract for difference. Does anybody know what contract for difference is?
You're buying at a price and selling it at the price. That difference is you're encashing. That's it.
Yeah, simple as that. Okay. So contract for difference is nothing but a contract between you and the broker, okay, which signifies that if I'm buying X amount of quantities on a particular stock, which is priced at Y, if that, and I anticipate that that stock will move by $2, if it moves by $2, the differential amount is what I get. So hence, if I'm looking at a stock which is valued at $1 and I've taking 10 orders, if it moves to $3, okay, how much do I make?
Indeed.
Simple as that. Okay, it's just a movement. There is no physical exchange. You're not giving your orders and receiving your orders. You're not holding on to the asset. Okay, it's basically, it falls under derivatives, okay, which is a price which is derived for the underlying assets. So you have nothing that you physically own of the asset. Okay, there's no ownership. There is only a settlement if you're right on the trade or you're right on the contract, or if you're wrong on the contract. If you're wrong, okay, you lose the money because the money goes to the broker because you've entered the contract. If you're right, it will be into your trading account because that's the contract. As simple as that. So you trade in CFDs, okay? Don't overcomplicate it when it comes to talking about option, because people have this misconception that CFDs is options. CFD options are part of derivatives, okay, which is essentially derived from the underlying asset. It gives you an option to exercise a contract, right? So very simplistically, we are trading CFD stocks, US CFD stocks, okay, and we are scalping USD CFD stocks. As simple as that, right? And then leverage is something again which is simplistic. So I think I put a slide on leverage. So basically, when you what happened? Yeah, so basically when you work on leverage, it's like with the amount you put in, you really don't have the ability to uh, buy a particular instrument. Like for example, if it's a stock, if it's valued at $500, if you're actually buying the share, then you need to actually have $500,000 if you're buying like 10, 20, 30 quantities. Okay, if you go with $500, okay, at the max you're going to get only one share. And how much of money you're going to be making with one share? Hence, CFDs with that leverage gives you the option that if you're putting $500, if the broker is giving you based on what, and you have various leverage sort of buckets which are there, 1:1, 5:1, 100:1, 200:1, 300, all the way. There are some brokers that go way beyond. Yeah. So basically 100:1, as in, very simplistically, you put in $1,000. Okay. You can actually exercise the number of orders that you have with the equivalent of what?
100,000.
Simple as that. This is your nominal value. You're getting leverage, which is it's a bit of a loan, you could say, from your broker so that you exercise more. Okay. And potentially with 100,000, okay, you could be placing your orders in with the valuation of the stock or whatever. Very simple. Right? Because if you take your $500 and if you look at a stock, you'll be like, oh shit, man, this is $1,050. I only have $500. So that's where this comes into place. You're getting leverage with the broker to trade in CFDs. Are we all clear?
Yeah.
So that's terminologies. Okay.
Kavya, why
Now,
would anyone give you that leverage? Why would the broker give you that leverage of
because it's
100 times
business,
your...
it's business, right? It's a product.
And will there be a commission on after the sale?
Yes.
Different
Yes. I mean,
different level of commission?
different brokers have different sets of commissions, right? So
Right.
one broker would say, you know what, hold on, I'm going to be charging you X amount on 10 contracts. One broker would be like, okay, fine, you need to, one broker would have different spreads, which we'll talk about later on. So the commissions would differ. So it's a product that they're giving you because this is an option, okay, in order for you to make money, but they can make money as well,
Okay.
right? Because when you're getting in a contract, you're projecting the price to move to a certain level. If the price fails to do so, they get the money. You've lost the trade, they won the trade. Okay. And we are not getting into the complexities. We're taking it simplistically speaking. Everyone who later on who has an account would, I'm not sure of everybody's account sizes and the accounts, but I will never, ever, ever move over 1:500 of a leverage. Worst come scenario. There's no need to do that, right? So you cap it with 1:500, 1:400 is even perfect, right? And that's about it. Yeah, there are some guys who take leverage of 1:1000 and they go all broke, but that's not the right way to do it. You should cap it between 1:400, 1:500. That's more than enough to suffice, right? But this is just to give you all the background how it works, because potentially someone would be like, okay, hold on, I have $500, but I'm getting into a CFD in a stock which is valued at $1,000. So how does that make sense? I don't have the purchasing power. Hence, this comes into play. All clear, Carlton?
Yes. And like say there's a loss, how soon we need to give the money back?
It's immediate. It's a cash settlement. I mean, it's a settlement.
Okay.
So if your account,
Immediately. Okay.
if your account is sized $10, you get into a trade with your stop loss at $2. It hits your SL. Your account balance is $8.
Hmm.
And if you have commissions, like 0.5 cents, I mean, it's 50 cents, it's 7.5.
Okay.
Clear?
Yeah.
Okay. So now
I have
we'll
a question.
go. Yes, Shilpana.
I just wanted to know about pips. I just really, how
Yeah,
is it calculated?
yeah, we'll get to that. Okay. But
Okay.
when you talk about Forex and when you talk about gold, we use a lot of pips. Okay. And generally when me and Zia are in a conversation, he would be like, is this 10 pips or is this 100 pips? And I would be like, this is 10 points and 100 points. And then I would go to a stock and then he would be like, how many pips is this? I would be like, it's a cash in of $2. Then he would be like, is this 20 pips or 2 pips? You see what I'm getting at?
Yeah, so stocks are not in pips. Only gold is in pips.
Yeah, because pips, gold and Forex is in pips,
Okay.
right? Stocks is very simple, right? And I think we are not talking about pips because pips is not part of the program. We are not dealing in pips. Okay. So when it comes to indices like the NASDAQ, like the US 100, you would see me writing points or pips. Okay.
Yeah.
The actual terminology is points. Okay. If
Yeah.
US 100 is trading at whatever 24,500, it moves to 25. If it's trading at 24,500, it moves to 2,500. It's 500 points of a move. Some guys would say pips for 500 points of a move. Okay. It's fine if you use that language as long as you understand it's 500 points.
Okay.
You
It's
don't blend
points.
it. You don't blend it with Forex terminology.
Yeah.
Because then if you say 5 pips, it's like 50 points over there.
Okay.
right? And then we are getting into complexities like micro lot, macro lot, mini lots. That is too complicated, right? So simplistically, if it's a stock is trading at $2, it moves to $4, it is a $2 move.
Okay.
Very simple. Okay. If it's $2 is trading at 2.50, it's a 50-cent move. Very simple. So if you're putting 10 orders on $1 and the stock is trading at $1, it goes to $2. Okay, you make $10. So your total account balance will be 20. And in the end, you would be like, I've captured a dollar of a move. Very simple.
Yeah.
Clear? So
Yeah.
we'll try to avoid pips and stuff because it's not really part of what we do. So there's no need to dive into it. Okay. But that's to be used when we look at gold and stuff like that.
Okay.
Okay, perfect. Now we'll come to the fun part because this is not really important, but I think we should understand this. Okay. However, we have half an hour. Okay. So quickly we'll go through this. Okay. Just for the context and for the fun of it, right? To understand how we look at spreads, because again, Carlton, to the conversation you had, right? What is spreads,
Yes.
right? So very simplistically, remember I told you all to have a banana.
Yeah.
Yeah, does everybody have their bananas?
Yes.
Everybody show me your bananas.
Yes.
Lakku, can we see your banana, please?
No, I don't have. I can
Ah,
bring it.
minus that. Yeah, you are losing your Kit Kat. You don't have any Kit Kat, but you have to give me a Kit Kat now. Wait. Okay. Now, very simplistically, again, not digging too deep into it, right? You've got this purple banana. Do you see the purple banana?
Yeah.
It's in front of you. It's a very rare banana. Okay. Now imagine what happens in the world out there is that you have your broker, which you all will have. Okay. And then, you're placing your orders there, and then other people are placing their orders with the broker, right? It's not only you. Other people are placing the orders. Okay. Now this purple banana comes at a price. Think of it as a stock. So that's a price, and for argument's sake, let's put it out there saying that these are the prices. Now, the guy with the cigar is the broker. Okay. You can be either one. You can be buyers, you can be sellers, whatever you want. Okay. And then what the guy does is he's evaluating the product, which is the purple banana. Okay. And on one side, he has people who are willing to sell. Okay. Willing to sell at these prices. Okay. Saying that 2000, 2100, 2200, 2400. Okay. But at the same time, okay, he's getting buyers on the other side saying that, okay, I'm willing to buy at 1860. And Henrik comes and, man, okay, fine. I'll think about 1890. Okay. So what he does is he gets into a contract saying that I can accept this for 1900. I am offering you 1900. You understood, Carlton?
Yes. Yes.
Okay. He says, I'll give you 1900. You say you want 2000. He says, I'll give you 1900. Take it or leave it. And you agree for that price. He takes his spreads and he takes his commission, takes this. And then he says, okay. And then he says, okay, this guy says, I'm willing to buy on the other side. Henrik is there, all ego. Oh shit, I want to buy this purple banana, man. I don't like yellow bananas. I like purple bananas. Okay. He says, okay, I'll sell it to you for 1910. Okay. So he takes your order into his brokerage. He sells it to the buyer, which is Henrik, at 1910. because he has to make money, right?
Yes.
You got it.
Yes.
It's as simple as that. It's buyers and sellers with interest in the particular product, in the stock. Okay. Every seller has to match a buyer. Okay. The transaction that happens within, the commissions, the spreads, it's all incorporated in that exchange of the transaction. If they're getting your orders in, they're flushing it elsewhere for a reciprocal sort of an order. It's as simple as that. And they make commissions and they make spread, they make money and all these things that are in between. Okay. So when it comes to CFDs, without getting into complexities, because when you start trading, you will definitely ask me this question. I know it for a fact. You will ask me that, Savio, how is it possible I entered a stock price at this? You see CFD? I entered a stock price at this. I can see the stock price. Okay. But hold on, I'm not getting this price, man. Savio, I'm getting this price. How? That's where this comes into play. So that's the spread. That's the price which the broker is offering to you. Take it or leave it. Right? So you will see this, that if the stock that you see is priced at $5, okay. Where was it? I think I'd mentioned it. Yeah. If you see the thing priced at $5, it's over here. Okay. 1 second. I think I have to make this. Yes, sorry, it went. Yeah. So if you see the stock price at $9, you will get a price of 8.7 below. 30 cents is what goes into the broker's pocket. Okay. So regardless of what you make, they are making 30 cents out of the trade. If Hendrik says, oh, $7, Are Savio, man, my order got filled at 6.5. What is this scam, man? 50 cents goes into the broker's pocket. And Shilpana will say $6, man, $5.9. What about this? Okay, 10 cents goes into the broker's pocket. Simple as that. So you will not get the right price at all point. And in any time, you will not get the precise price because of the spreads. So if we say, man, I don't want to get into this stock because the spread is more, understand what I'm saying. You will not get filled into that price which you want. Are we clear?
How do you know what is that spread?
We will see it on the chart.
Okay.
So the price,
it varies with different brokers, right?
it varies with different brokers. Yeah, precisely. So we will see it when we go, but just when I say at that point of time, I want you all to be aware as to what I'm talking about. Because that time you might feel cheated. You might say, what the hell, man? I am seeing this and I'm getting this. There's something wrong with the broker. Right? So that's business. That's the way things function. That's the way how they make money, which is right. Otherwise, how would they function? Right? No free meals in this world, right? Carlton, did you get this?
Yes, Savio. So is spread the only deduction that we are going to?
I mean, they have commissions. Okay, that is
Right.
separate. It's not deducted when you book a ticket. Okay.
Then how is commission this one?
Commission separate. So basically on a closure, like for example, Bharat's broker might charge him $10 on particular lot sizes. My broker might charge me $1. Zia's broker might not charge anything. Somebody else's broker might say, if you hold a stock, then I will charge you. That depends.
Okay, so
Broker to
commission
broker.
is based on holding and spreads are based on CFDs.
Yeah. No, spreads are taken at source when you punch a ticket. Okay.
Okay, you buy, you sell, spreads on both?
Yeah, buy and sell spreads on both. Because there's a
Okay.
transaction, right? So even if you're selling, okay, if you're selling down below, you might get a price which is not exactly as per that price. It will be slightly
Right.
higher. because
Okay.
that's one. So they're getting a buyer who's giving that price. They take it over there and give it to you at a slightly differential rate so that they make that money in between. And then after execution, they'll say, okay, fine, end of the day, this is your commission that you have to pay us.
Okay. So is it right to understand that spreads is we are giving brokers a small fee in order to help us buy and sell the stocks?
Yeah, the
Right.
transactional costs and whatever,
Okay.
without
Transaction cost. Okay.
overcomplicating it,
Okay.
right? Without
Okay.
overcomplicating it, right? So
Right.
that is
And
because in
commissions
case
are when you hold something, like when you
it
hold the
depends.
stock for a
Now,
long time.
no, it depends. For example, Laku can explain, he might have a commissions on his broker, trade by trade basis. I might have a commission which is based on particular instruments. And maybe Shilpana might have commission based on the holding period of a particular instrument. So commissions differ, right?
Okay.
But spreads are spreads based on anything. There has to be a spread. So which is why when we choose a broker, we always ask, how are the spreads?
Okay.
Right? So y'all should be able to relate. Okay, if someone says it's low spreads, oh, fantastic, because we are going to be making, 20, we're going to be getting haircuts of 10 cents, which is good enough.
Okay. Haircuts is deductions.
Deductions, right? So haircuts meaning if it's a small sort of a spread, it's good for us, right? Why? I mean, the lesser the we pay for the price, the better it is. So more spreads would mean you're never going to get the price you want. Okay, which is not good. Generally, we should be getting low spreads, right?
Basically, we are looking for a $2 movement. Then the
Yeah,
spreads should be very minute.
very minute. Otherwise, what's the point if it's 50 cents,
Correct.
right? So these are the things we'll look at later on, but just for your information.
Okay.
Okay. So that's about it. And now, what else? What else? This we've covered. Yes. Yeah, Laku, getting to the point. Now, when you have access to trading terminal, okay, because I look at it, you might have different people might have different platforms. Okay. So this is what I look at. Okay. Just to give me an indication of what I should be picking up. Now, the actual stocks are not here, the tickers are not here. This is just to showcase what I look at. So what I look at is in trading terminal, I can filter out the stuff I want to look at, things with like massive breakouts and blah blah blah, which is here. And it will give me this full list of tickers. Okay. And you can ignore change and all. It'll give me this full list. And then I'll be like, what is the float of this? Okay. I'll be like, what is the float of this? Okay. And what is the daily volume? Okay. And that's nothing. And that will give me an indication saying that, okay, hold on, man. There's a lot of volume in this, in this, where's the volume? There's a lot of volume here. Okay. There's a lot of volume here. There's 20.7 million, which is there. Okay. Do I think that this is something that is going to give me good opportunity? I think, yeah, let me put this in my kitty. And say, for example, this is 251 million that we can't see the denomination. This is let's put this in the kitty. Okay. Then, what's the ATR? ATR is 10.57. Do I see volatility even though the volume might be low? Yeah, let's consider this. So I take 5-6 stickers and put it in my basket. Okay. I take it, put it in my basket, and then I'll just have a viewing towards the important news that I see. And then I'll say, okay, nothing at all. Let's not look at it. Something, let's look at it and forget about it. And then I'll take these 5 tickers and go into the markets. And when the bell rings, I'm not looking at anything of this, and I'm only concentrating on trading and scalping. This is how I gauge which is the stocks and the tickers I need to pick. And it's via a system which I'll introduce to you all on the 20th. Okay. But this is how I gauge where do I see potential in the stocks, in the tickers? Okay, so if I have a selection which will give me a gap downer, and everybody has it. I think you'll find it in every platform. Okay, because I am connected to trading terminal, so I have this synchronized in my system. Okay, and then like Oracle might be there, and I'll be like, you know what, Oracle was in the news, man, yesterday. It's if it's come down to 10%, I think I should have a look about it. Let's see the volume. Tradable, yes. Let's see the daily ATR. 14.3 is good enough. It gives me range. Let me put it in my kitty. Then I'll take that and then I'll choose. Okay. Now,
Okay.
yes, go on,
Sorry.
Shweta.
Yeah. So this trading terminal is a site.
Yes, it's
It's a
trading
separate site.
trading terminal is you have seen Iron Man, Shweta?
Which one?
Iron Man,
Movie.
yeah, movie.
Long back, yeah.
You saw Iron Man, no?
Hmm.
Robert Downey Jr. Yeah.
Yeah.
You know Iron Man's heart, that
Mm-hmm.
thing, that light,
Mm-hmm.
that is Market Atlas, which is part
Okay.
of trading terminal.
Oh,
You get what I'm saying?
yeah.
Yeah. So if you have watched Shansha, you know that thing he has, Amitabh Bachchan has that steel hand.
And
Yeah. Without that, he's nothing. Same way. So that is the essence which you all will know about later on, right? But this is how I gauge what tickers I have to pick up. Okay, when I start. Simple as that. And day by day, I will tell you all a bit more.
okay.
All right. So now we'll move into volume. Okay, because a lot of our assignments are based on volume, right? I don't look at volume again because I'm well versed with the charts. So, but it's something you all should know, and maybe some of you all look at, but it's always good to talk about it. So volume is nothing but these green and red bars that you have populating. Okay, that showcases that at this point of time, at this candle, you have this volume happening. As simple as that. Larger the bar, larger the volume. Lower the bar, what? Lesser of the volume.
Yeah.
Simple? Simple?
Yes.
Yes. So now we'll look
Salve,
at the,
the bar right now where the cursor you've placed, right? The green one, the tallest green one, yes.
yes.
And does that say that there has been that many people who've bought those shares?
Yes. There's volume.
Okay.
There's volume in that. That's where a lot of buyers are actually coming in.
So that will give us an insight whether it's a bull
An
market or a bear
indication. It'll give you an indication.
market. Right. Okay.
Yeah. Okay. So now we'll move on to the real charts just to see. Okay. So I'm in the real charts and we're going to pick up a stock like say let's go to Tesla. Okay. Now we'll go to Tesla. I'll use your chart because you all have green and red, right? I'll use your chart. Okay. We'll go to Tesla. We'll go to Tesla and we'll go back in time to a date. Let's say someone pick up a date. Which date? Any date first in April.
22nd.
Okay, 22nd. It's your birthday or what, Carlton?
You said any date, so I thought why not?
Okay. Okay, let's go to 22nd. Okay, so we're going to 22nd. Okay, here we are. I have to select the date over here. Okay, so 22nd. We go to 22nd. We go to market open. Okay, yeah. Here's market open. Okay. Now we don't have any indicators used because last time we spoke about putting those indicators in. We removed on the indicators. This is the volume. This is the candlestick. All clear? Simple. Now the markets are going to open. Okay. So we'll take this forward candle by candle. Okay. We'll move to the next candle. What is this? Bearish?
Bearish, yeah.
Bearish candle, bearish volume. Fine. Can we say that, okay, the next candle will dump, can go down based on this?
Yeah.
We can assume that it will go down, right?
Mm.
We can predict it can go down. Okay. So if we go to the next, we don't know, maybe the next candle can be green. Okay. But as per this, we can kind of generate a thought saying that, okay, fine, there's volume here. Okay. A nice selling candle. Okay. But if I was using my common sense, again, I would think like, hold on, it's the first candle.
Mm.
That doesn't give me anything because it's just an open. It's like a horse race, right? When the gates open, everybody's having that enthusiasm and it's
Mm.
having that adrenaline run and they're going through, right? But towards the end, you'll have variances and that's how you determine who's the winning horse, right?
Mm.
Correct? Same way.
Yes.
At the start, when you have this first candle, there's always a flush and you don't know. So if you go to the next candle, what happens? See, now I'm not looking at the chart, right? I didn't look at anything. I'm just able to understand how well Tesla could probably move.
Mm.
There's nothing that I do in black and white to say that, I follow XYZ. It just embedded into my membrane saying that this doesn't seem right. And that's the skill I want to pass on to you all. Just by looking at the ticker to understand its DNA and its behavior, right? So if I see this is a green candle now, and we didn't enter the trade, but this is showing me that there's a significant amount of volume which is coming at par with the previous selling candle, which is red. Okay. And when I say like make a storyline, that's what I mean. I'm saying, okay, fine. Do I see potential? And then obviously we're looking at other things. But as per this, do I see potential? Let's wait because it's a green candle, green volume over red candle with a red volume. Okay. Let's wait for another trade and see how the thought process is going, right? Then we see mixed action, red, green, red, we're not sure. Let's just wait for another nice break with a nice bullish volume, which is there, a set number of volume candles. Maybe we'll get our entry, okay? And maybe we'll see. So when we see this, you see this volume increasing, see the candles increasing, then you can be like, let me take a risk, man. What is there for me to lose? Let me take a bit of a risk. Okay, let me try to get around $3 because I've seen volume come in, right? 1, 2, 3, one after the other. Can I take a bit of a shot and see, okay, how it goes? Maybe it'll go against my way. It did go, right? And I'm up. Okay, and then if you go up, you can see that it actually goes up. Okay. Now, what was my thought process at that point of time? Is because, okay, there's been multiple, I've been observing the charts every single day, but I'm trying to derive a storyline, think that this is what I see. Now over here, there's high volume. Okay, so I can be like, fine, there's high volume there. Maybe I can take a risk. Maybe I should wait. So this is the sort of storyline you should derive. But if you have the volume on, this is the possible storyline you can derive and take a call at any point of time. But this is we don't look at volume, but this is just for information because a lot of people do use volume. But I personally don't look at volume, right? But in terms of indicators, this is something which you all should know because a lot of people do use volume, right? And I don't want to be keeping you all in the lurch, being like, okay, fine. If someone talks about volume, we have zero knowledge about it. This is how you can use volume to anticipate the movements of the trades, but you can't solely depend on volume as the base of your trade or your decision making. All clear? It's a very simplistic tool used to gauge price movements. It's not accurate. Okay. I don't use volume again. Okay. But some of you might want to use it. So feel free, if you want to use it, you can use it, right? But this is exactly how it's intended to be used along with other sort of confluences. Are we all clear on volume? Do you have any
Yes.
questions on volume?
No.
Okay. So basically I don't look at this indicator. I am able to understand volume by looking at the candlestick. So I don't need volume to make my decision. So over time, you all will learn that. But as of now, if someone wants to really understand volume, you can click on the indicator. It's called VOL. So if you go to indicators, you can go to VOLUME. You will have volume over here. You can see volume.
Yeah.
You'll have volume over here. You can just put that into favorites. You will get it over here, VOL. And if you click on it, if you unhide it, it will populate right below the volume, right? So VOLUME. You click on this, it will be on your favorites, and then you can just get it down. So this is volume, right? Uh, something which is kind of handy, not really required, but it can be in handy if you want to add it to your list of indicators. But I just want to ensure that you all know about it before we get to other things further down the line, because you might talk about it at any point of time. So I want everybody to be in sync with the understanding on volume, right? So all clear thus far.
Yes.
Yes. Yes.
Yes.
Perfect. Okay.
Yes.
So we covered our content in the time limit, which is phenomenal. Okay. So now we'll get to homework. Okay. Again, very, very simplistic, because I think Maria's still due for the homework. So I want to make sure everybody is actually putting screenshots just exactly the way that we mentioned. You go to TradingView. You either do one of the two. One is click on the snapshot button, go to download image or go to copy image. If you download image, you have to attach the file. You can do copy image also. Copy image is preferable because then you don't have to go through the hassle of downloading the image and then attaching it and then saving it. You just copy the image and you paste it onto the assignment page, and then you can write your comments. But essentially, I want to get a feel of how everybody's thought process is in terms of, in terms of reading the charts a bit. Okay. So when it comes to the assignments in which it's mentioned, for example, screenshots of P&L, risking $2 to make $6 is very simple. You all should know that by now. That is very simplistic. Volume playing a role in momentum rally sell-off. As in, for example, you look at volume with this indicator, and then you tell me that, you know what, Savio, I see some volume over here. I see this holding up, okay, and I see this volume slightly being more than the previous candle. So this would be my point, which of significance, saying that, you know what, this candle was a green candle which held, the volume was good, okay, and I could notice a rally. So you're kind of interfacing everything what we've learned day before yesterday, okay, what we've learned today, to create a bit of a story. And then you would be like, you know what, when we've come over here, we've seen a dip in volume, a nice bullish engulfing candle, momentum, but we've seen a red candle, a dip in the volume. So I'm looking at this because after this, I have not seen price going further. You see that? It's kind of taken a bit of a retracement, right? It's taken a bit of a retracement over here. It's not broken its high over here. It's not gone further. It's taken a bit of a retracement and it stopped at this 390. Formulating a story, right? A storyline. And then when you go to, again, that's part of retracement examples because then you'll talk about it. Okay. The same. Use the elements that you've learned over this week to create a storyline over 10 tickers, 10 instances where you see price movement and stuff like that. And you put it up across. Is that fair enough?
Yes.
Yeah. So you all have 3 days because apparently no one wants to have a class on Monday. I will be trading on Monday. So it's a normal day for me. But we'll connect on Tuesday.
Okay.
Right? Are we good so far?
Yes.
Yeah. So I just go to that assignment again. That
What tension are taking, man, Hendrik assignment?
no, I just I just wanted to see something.
No, you have to take tension. Yeah. Tell me. Correct. Yes, very good. I like the spirit. Yeah.
Market shift examples, meaning that
Okay.
means it's going up and down.
No, market shift example is like what Shilpana was talking about, right? When I asked her the question. Now you look at the chart. This is a chart, okay? Now you will give me points. What is market shift? This is bullish, right?
Yeah.
This is bullish. This is bullish. Okay.
Yes.
Which point is, do you think this is a market shift where now your bias is taken from bullish to bearish? Do you think it's here when it's broken this level? Which is your point that you have to look at? I'll give you another example. Yeah. Okay. The market has come down, right? This is open, right? The market has come down.
Yeah.
Okay. At which point is your bias changing towards the market? As in, it's a sell-off. From a sell-off, hold on. It's buying now. Which point? Is it this point or is it this point? Or is it this point? Because from this point, okay, this level which sold off has been broken and you have a rally. Which point? And there's no right or wrong here because everybody's sort of judgment is going to be different. Everybody's sort of thought process is going to be different. I'm just trying to gauge everybody's understanding on what is retracement, what is market shift, market sentiment shift, and then we'll move further into next week with some bit more stuff in details till we get to the 20th.
Yeah.
All good. So you'll have 3 days. There's ample of time, I think, to spend with the family to look at this as well. And then we can touch base on Tuesday. But does anybody have any more questions?
At the moment, no, Savio, but if I do, I will drop a text on the group.
Perfect. All right. So yes, have a brilliant weekend. Laku, you had something to say?
Savio, one
Yeah.
I want to ask you. Can you go
Yeah.
to that candle
Which one?
on the top?
This one?
No, where you have marked as candles, no? Where you select the list of candles on the top.
List of
Yeah, on the left side. Yeah, before.
Here.
Yeah.
Yeah.
Can you click that?
Okay.
Yeah. If you can see, there is a volume footprint over there,
Where?
down there.
Volume. No, but this is the extreme version, man. This is the premium subscription version.
Okay, but we are supposed to use this one or no?
No, do you see me using this to make money?
No.
No, we don't use. It's one and the same thing. It's the same. It's the same stuff which is here. I don't think TradingView is going to give you an actual volume footprint. I don't think that is possible at all.
Okay.
Right? It might be there. I don't think it's indicative of what you're trying to say in terms of, okay, where's the actual volume coming in? I don't think so. And moreover, if you think about it, we are not going to be basing our decision making on historical volume and current volume, which we know, right? Now, for example, why do you need someone to tell you it is green, go cross the road? You need someone to tell you, you need to have those blinking bars down on the street to tell you to cross. You don't need that, right? So, for example, if it's green, it's green. You look at the size, you look at everything, you look at the volume, it's green. Okay. What we need to look at is where do we have interest in with price? That's where the money is. Not that I know this is green and then someone telling you, you pay me 30, 40 bucks just to tell you this is green. But you know what? They'll divide it 10, 15, 20, 30, 40. So we don't need that. It's a lagging indicator. It's an indicator which is
Okay.
lagging,
Okay.
right? So we don't really need that. I've never used this footprint at all in my entire life. There's no need to use it at all. So I think we can do without it. If someone wants to use it, obviously they can do so. But I think we can invest that amount we pay on the premium package, which is I think $40, $45 into something else better, which will be of more value.
Mhm.
All right.
All right.
Perfect. Hope this was useful, guys. And we shall
Yes.
have a nice weekend and we shall connect on
Thank you very much.
Tuesday.
Thank you,
Yeah,
Sagar.
thank you so
All
much.
right.
Thank
Yeah.
you.
Cheers, guys.
Thank you.
Take care.
Bye.
Bye-bye.
Thank you all.
Thank you. Thank you.
Bye-bye.
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 Bye.